If you own a home in Florida, you need to hear this because the Florida housing market isn't crashing everywhere, but in certain pockets, the numbers are moving in the wrong direction at the same time. And the scary part is this: if you only look at headlines like Florida is still strong, you can miss what's happening in your zip code until your equity is already gone. Today, I'm breaking down 10 Florida cities where home values are dropping right now, where listings are sitting longer, and where sellers are being forced to cut prices to get attention. But this video isn't here to scare you, it's here to help you. If you're a homeowner, I'll show you what to watch so you're not blindsided. If you're a buyer, I'll show you how to negotiate like the market has changed, because it has. And if you're an investor, I'll show you where the risk is highest and what signals would tell you the bottom is actually forming. Not financial advice, educational analysis only. Now, before we get into the list, we need to talk about why Florida is softening, because it's not just interest rates. Florida's market ran hot for years because of one big engine, people moving in. But that engine slowed hard. The US Census Bureau notes Florida's net domestic migration dropped dramatically, down to 22,517 in 2025 from 183,646 in 2023 and 310,892 in 2022. Florida also fell to 8th place for net domestic migration in 2025, and Alabama even ranked higher during the July 2024-June 25 window. That's a massive demand shift compared to the boom years. Next pressure, inventory and market balance. Florida realtors reported that by the end of 2025, inventory was sitting around 4.6 months of supply for single-family homes, but a much higher 8.8 months for condo townhouse inventory. That condo number matters because condos can drag comps down fast when sellers start competing. And then there's distress pressure, foreclosures. ATA Team's January 26 foreclosure by state reporting shows Florida among the worst states, with 1 in every 2,067 housing units showing a filing, and it calls out multiple Florida counties with high foreclosure rates. And in late 2025, local reporting based on Atom's October 2025 report highlighted Florida with 1 in every 1,829 homes facing foreclosure, and Tampa as the top large metro with 1 in every 373 housing units. So here's the setup. When migration slows, inventory builds and distress rises, prices don't fall evenly. They fall where affordability is weakest, insurance/HOA costs are highest, and supply is heavy. Now let's get into the list. We're going from softening to serious downside risk. Number 10, Lakeland, the commuter market squeeze. Lakeland is a classic example of what happens when a market becomes the in-between solution, close enough to Tampa and Orlando to feel connected, but cheaper until it isn't. Zillow shows the average Lakeland home value is about $306,505, and it's down 3.4% over the past year, with homes going pending in around 41 days as of late January 2026. In a softer market, Lakeland gets hit by a simple question. Buyers start asking, why am I paying peak pricing to live far away from the job centers? If you're selling, expect condition and pricing to matter more than ever. If you're buying, demand concessions, rate buy downs, closing costs, repairs. If you're investing, stress test rents and vacancy. Don't assume 2021 demand. Number 9, Ocala. Demand exists, but sellers are competing again. Ocala is still popular for people who want more space and lower prices than coastal Florida. But even here, values are softening. Zillow places the average Ocala home value around $267,263, down 3.9% year over year. And homes are going pending in roughly 68 days, updated late January 2026. Longer pending times are a signal. Buyers are taking their time. That usually means more negotiation and more price reductions, especially on homes that aren't updated. Number 8, Port St. Lucie, the affordability wall. Port St. Lucie caught a huge wave of buyers who wanted to be near South Florida without paying Miami or Palm Beach pricing. But affordability is a wall you eventually hit. Zillow shows the average home value in Port St. Lucie is about $378,437, and it's down 4.2% over the past year, with homes pending in around 59 days, updated late January 2026. When monthly payments stay high and buyers have choices, sellers lose leverage. That's when nice-to-have pricing turns into meet-the-market pricing. Number 7, Orlando, not a crash, but a clear cool-down. Orlando is big, diverse, and supported by tourism, healthcare, and professional services, so it often avoids the worst drops, but the direction still matters. Zillow shows Orlando's average home value is about $367,868, down 4.0% over the past year, with homes going pending in around 46 days, updated late January 2026. In a market like Orlando, small declines can still hurt recent buyers because transaction costs are real, agent fees, closing costs, repairs, and sometimes HOA. If you bought in the last couple of years and need to sell quickly, you don't need a market crash to lose money. You just need a softer market and a tight timeline. Number size, Tampa foreclosure headlines plus value softness. Tampa is one of the most watched Florida markets right now, partly because of foreclosure pressure. Fox 13 reporting, based on Atom's October 2025 data, highlighted Florida as having the nation's highest foreclosure rate at 1 in 1,829 homes, and it cited Tampa as the top large metro with 1 in 373 housing units facing foreclosure filings, with notes about backlog effects. Meanwhile, Zillow shows the average Tampa home value is around $366,612, down 4.2% year over year, with homes pending in around 46 days, updated late January 2026. Here's why foreclosure pressure matters, even if you're not in distress. Distress listings create pricing gravity, they reset comps, and they force retail sellers to compete. Number 5, Naples high-end doesn't mean immune. A lot of people assume Naples is protected because it's desirable and has wealth. But even premium markets can correct when inventory builds and buyers stop rushing. Zillow shows the average Naples home value around $544,151, down 6.9% over the past year, with homes going pending in roughly 64 days, updated late January 2026. In luxury-adjacent markets, the correction often shows up as price cuts, seller-paid incentives, longer marketing times, and fewer backup offers. Number 4, Cape Coral, the resale pressure zone. Cape Coral is one of those markets where supply dynamics can shift fast, especially when demand slows. Zillow shows Cape Coral's average home value around $333,561, down 9.8% year over year, with homes going pending in about 58 days, updated late January 2026. And at the metro level, Resi Club Analytics noted that among major U.S. metros, Cape Coral Fort Myers was down 18.8% from its 2022 peak, when a market drops nearly 10% year over year in Zillow's index and is still materially below peak in broader metro analysis. You're not looking at normal seasonality. You're looking at a market that's searching for a new price floor. Number 3, Fort Myers, double hit, values down plus market friction. Fort Myers remains one of the clearest examples of a market where homeowners can feel squeezed from multiple angles at once. Zillow shows the average Fort Myers home value around $310,708, down 11.5% over the past year, with homes going pending in around 61 days, updated late January 2026. When values fall that quickly, sellers who bought recently can get trapped, because if you put 5% down and prices fall 10% to 12%, your equity can vanish fast after transaction costs. Falling prices can turn move-up plans into wait it out. Number 2, Northport, the condo and resale slowdown story. Northport is one of the names you keep hearing because price drops became obvious enough to make local headlines. A Suncoast News report cited a 10.3% decrease in Northport home prices from April 2024 to April 2025 to April 2025 to April 2025, describing a market shift where buyers gained negotiation power and sellers had to adjust expectations. And zooming out, Resi Club Analytics also flagged the Northport, Sarasota, Bradenton metro as being down 17.4% from its 2022 peak, placing it among the weakest major metros in the country during this cycle. This is where people get confused. They hear Florida is fine, but their local market is behaving like a buyer's market. Price cuts, longer listing times, and sellers competing harder. Number 1, Punta Gorda, the epicenter of the drop. All right, this is the one to watch closely because Punta Gorda shows what a full correction looks like when demand fades and the market has to reprice. Zillow shows the average Punta Gorda home value around $331,019, down 13.0% over the past year, with homes pending in about 67 days, updated late January 2026. And Resi Club Analytics reported Punta Gorda as down 25.3% from its 2022 peak, making it one of the largest peak-to-present declines among major U.S. metros discussed in their Southwest Florida correction coverage. A 13% year-over-year decline plus a 25% plus peak-to-now drop tells you something important. This isn't just a slow season. This is a market that got overheated and then lost the demand fuel that supported peak pricing. If you're a homeowner in one of these cities, here are the 3 moves that protect you fastest. Know your true net number, not your estimate. Call a local agent, get a realistic range and subtract selling costs. If you must sell, price for attention, then negotiate. In a cooling market, overpricing doesn't test the waters. It burns your listing. Reduce your monthly risk. Refinance if it actually saves money, shop insurance if possible, and cut optional carrying costs because the market may not bail you out with appreciation. If you're a buyer in a softening market, your best weapon isn't aggressiveness, it's patience. Use this checklist. Ask for seller-paid closing costs. Ask for rate buy-downs. Ask for inspection credits. Don't waive contingencies just to win like it's 2021. Compare days to pending trends and listing reductions in the neighborhood. And remember, Florida Realtors data showed condo inventory supply ended 2025 far higher than single-family supply, 8.8 months versus 4.6 months, meaning condos may face heavier competition depending on the building and fees. If you're an investor, if your strategy is long-term rentals, your #1 job is to avoid buying a rent that can't cash flow under conservative assumptions. And if your strategy is flipping, be careful. Longer listing times kill returns, price cuts eat margins, and buyers are no longer emotionally bidding like they did during the migration boom. Also, foreclosure activity matters because it can push supply into the market. Tatum's reporting places Florida among the states with higher foreclosure rates, which can create localized price pressure. So that's the list. Lakeland, Ocala, Port St. Lucie, Orlando, Tampa, Naples, Cape Coral, Fort Myers, Northport, and Punta Gorda. 10 places where home values are dropping and where the market is behaving very differently than the boom years. And the biggest takeaway is this: Florida isn't one market. It's a collection of micro markets. If you're thinking about buying, selling, or investing, stop relying on statewide headlines. Pull city-level data, track inventory behavior, and always factor in the real monthly cost of ownership. Comment your city and what you're seeing. Price cuts, longer days on market, more listings. If you found this breakdown useful, subscribe, because every week we track where the market is weakening, where it's stabilizing, and where the next negotiation opportunities are. See you in the next one.